Hello everyone and welcome back into Crypto's News. It's me, Omar Bam, aka Crypto, here to give you guys the latest and trending information in crypto and plenty more. We're going to be discussing what's going on with prices, what's going on with ETH prices, looking nice, what's going on with Trump coin. We're going to be talking about Ethereum's MicroStrategy. We're going to be talking about plenty more. You're going to want to stay tuned all the way to the end, guys. Thank you so much for your time and for joining me today. Remember to hit like button if you do enjoy these videos. And subscribe if you want to stay tuned for more news. Since 2016, we're pretty much the first daily cryptocurrency news channel. So thank you guys for your support. We're going to start off by looking at the prices. We have overall the market caps for crypto down 3.2%. to $3.654 trillion. We have Bitcoin down 2.5%. Still over $100,000 though at $102,254. It is now more down on the week than Ethereum. Bitcoin is down 2.5% relative to Ethereum's 0.9%, which is actually positive on the day. Ethereum positive 1.1% to $3,289.14. And this is the second day in a row, signs of things to come, where Ethereum is positive. And certainly more so than Bitcoin. It is the top mover in the top 10 for 2 days in a row. Quite fantastic. We have gas prices nice and low at 1.9 gwei. Ethereum dominance back up to 10.9% versus Bitcoin's 55.4%. So what is potentially driving Bitcoin down today seems to do with this promise of a Trump tariff from the White House that is coming as soon as tomorrow, affecting Mexico and Canada at 25% tariff rates. We can expect to pay more for products coming from these countries. So Bitcoin kind of recovered after the initial settling of that kind of news, as it might have seen, according to a report from Reuters, that we would have to wait until March 1st before we actually saw these tariffs. There could be a delay pending a way to seek exemptions for certain exports, a process whereby these countries, different manufacturers, producers, suppliers, whatever, could apply for an exemption, and that process could be rolled out by March 1st. Then the White House press secretary Caroline Leavitt came out shortly to tell reporters that the tariffs would in fact go in place tomorrow, the Chinese and Mexican ones, and along with Chinese tariffs of 10%. So this then caused Bitcoin to give up any of the rebounding that it had had, but Ethereum managed to stay positive, which is interesting. Still, it's down off some of the recent highs that it had today, off of this news, but still positive. However, things are looking still really good for Bitcoin. I think in the tailwind for Bitcoin here is a lot of what's going on with these different states proposing for Bitcoin strategic reserves. I really appreciate this chart. Finally, someone's put together one. It was shared by Bitcoin Magazine. The source is Legiscan, and it shows the current status of where these different states, 15 states, are at with regards to enacting this into law. Some are in earlier stages, and some are almost ready to get signed into law, depending on which branch of their governments, their state governments, go ahead and approve this. So really cool to see that. Just wanted to share that since we've been covering a lot of these different states and their Bitcoin proposals. And yeah, excitement about Ethereum. Martini Guy, a YouTuber, a crypto YouTuber, just like myself, who had shared this chart on Bybit of an ETH long perpetual, I guess ETH short perpetual contract. I'm always long, so that's kind of how I look at it. And it's looking like it's quite close to a breakout. He said here, slowly, then suddenly, Ethereum looking like a huge breakout is coming. I actually agree with you, Martini Guy. It does seem like it's going to be massive. Seems like there's a huge amount of support and bidding, including from Trump, which we're going to be looking at, and his linked global financial DeFi company that is buying ETH, and how it looks ready to explode. Eventually, the sellers, the short side, will likely end up quite liquidated, and it will be in favor of the longs here. Will probably win out, would be my expectations. When we actually look at the ETH longs versus shorts. We can see pretty much, let's see the 24-hour one, that it's quite evenly split. 50.37% are long and 49.62% are short, which would, be profitable if things went down, but it might not be the case for some time. I would be quite scared if I was on the short side of ETH, looking at what we're seeing how sentiment was so low. Really, it could only recover, it seemed, to the upside. And that's a lot of what I'm seeing today when I'm looking around crypto social media. This kind of like renewed vigor from the Ethereum community. So many different efforts now. And so I think it's really only going to be a matter of time before we have some huge breakout. And there's been, for example, new projects that are trying to create MicroStrategies strategy for Bitcoin. And here is one such called ETH strategy, busy saving Ethereum, turn on notifications. They write here on X, on their X account, the MicroStrategy playbook for ETH. That's what ETH strategy wants to build, they announced. Fully on chain, as decentralized as possible, DeFi native and open to everyone. So this is actually being led up by the CTO, ex-CTO, Chief Technical Officer of SushiSwap, one of the first, I guess, imitators, copycats of Uniswap, which is pretty much a household name now. It came out during the summer of DeFi, which was before the summer of NFT here in crypto history. Anyway, going forward here, it looks like there was some bad news here with their initial launch. You might have trusted a SushiSwap CTO with your ETH, but it didn't go so hot. They wrote here and they announced, during the testing phase of the protocol and before the announcements of the launch, the UI was misconfigured, allowing users to deposit to the wrong address. In this short time, 165 ETH was deposited by users to the incorrect address. The UI was fixed immediately. We have since sent 165 ETH into the deposit contract of their own funds, making everyone whole. Those depositors will receive their corresponding ETH SR, so that's Strategies token, shortly. Depositors have been made whole. The deposit contract is safe. The UI is configured correctly now and is safe, and existing depositors are not affected, they wrote. The response from the community has been awesome. Nothing has changed. ETH will win. Funds, Seifu. So what I can kind of gauge from this is that they had a test net, a period of time where they were testing this out, this smart contract, and it had a test address. Unfortunately, when they went ahead and launched, they forgot to change the test address, and users starting to send ETH ended up sending it to an address not under Strategies control, and therefore kind of losing that ETH. Strategy then took 165 ETH that was deposited out of their own pocket, and they didn't pocket it at all. They actually lost money on this one, and then funded the contract as a good way to not only stay solvent with this contract, but obviously when it comes to trust and user trust, which is supremely important in crypto. So I did like that response from them. But yeah, here's their website, Strat Protocol, autonomous ETH treasury leveraging long-dated convertible debt to reimagine Michael Saylor's MSR strategy in a DeFi native context. They go on to announce how it kind of works down here. By utilizing long-term convertible debt, Strat enables participants to bond assets in exchange for levered ETH exposure with downside protection through convertible notes, offering a secure and transparent way to benefit from ETH price appreciation. What if ETH goes down, right? During the bond period, you locked up this ETH, you got this other token. What if ETH actually goes down? Would that be systemic? They wrote here, a systemic problem, that is, if ETH's value significantly decreases from the average buy price over 4.2 years from the bond date, bondholders will receive a proportional share of the treasury. They basically have a DAO here, the decentralized autonomous organization, a way of managing funds, generally using voting power with some sort of token usually. This risk is considered acceptable as most early bonders are ETH bulls seeking liquidity while maintaining long-term exposure. Once out of the bootstrap phase, new bonds will represent only a fraction of the total treasury. So this article here on protos.com covers a little bit more. They're going to hope to replicate MicroStrategies leveraged BTC play directly on the blockchain, with users receiving ETH SR tokens in return for ETH deposits. This was the promise, and probably continues to hope to be. The underlying pool of ETH will later be controlled by ETH SR token holders via a DAO. The post informing users of the mishap came just over an hour after the announcement that the deposits had opened. So far, the project's website shows just 268 out of its 10,000 ETH cap being filled. And so let's go to, oh no, it turns out that they are no longer publicizing what they are raising on their website. The website here for depositing seems to now be offline. This deployment cannot be found. Strange. Anyway, so DeLong, the founder of this, the ex-CTO from SushiSwap, had claimed that they had been really well subscribed before the rollout. Apparently 40,000 ETH had been pre-committed before launch. There was a whitelist, he wrote, now closed. We've received over 40,000 ETH in pre-commitments and are well over the 10,000 ETH cap. Deposits open tomorrow, trying to get people hyped up about this. And then people basically threw their ETH in the trash. It's like, oh yeah, send it to this address, right? And you mail it to the dumpster. Would have been pretty much the exact same thing, since like this just reminds me of that dude who lost all that Bitcoin in a hard drive that he had thrown away, and he had tried to petition courts time and the city approval to dig through the dumpster. Recently, there was a court announcement that no, he was not going to be allowed to go through the landfill to look for his Bitcoin. Kind of sad. I'm sure he'll appeal that, but yeah, total aside there. They might as well have done that with this ETH, since it was just thrown away. Anyway, and the final here. Some users suspected the problem lay with the use of the deposit address created in the testnet phase, like I mentioned before deployment of the project on Ethereum's mainnet. Some even replied with a potential solution. DeLong snapped back at another user's concerns around the rush nature of the launch, saying the issue has nothing to do with audits. Retard. We'll look at that right now. But yeah, someone in response to this announcement of the flubbed address being posted when going on mainnet, Big Will wrote, I got a bad feeling about this when they FOMO'd the initial process. Fumbled since and then this. There aren't many good operators in crypto. It's mainly because it attracts degens and gamblers who often have a below average IQ. Nothing wrong with that, of course, until they start thinking they can run projects. I mean, what an absolute schoolboy error. I wouldn't trust this mob with any of my crypto. Rest in peace. These kinds of comments seem to be getting to Joseph, the founder. Here was that one about calling someone a retard. Cinco Cento wrote, so you did an audit before opening deposits? It's great. You made them whole, but shows incompetence. Make sure your shit works before going live so people will take you serious. And in response, Joseph wrote, this has nothing to do with audits, retard. I actually think it does, right? If you had some sort of entity who had the skills, right, to actually audit this stuff in the first place, but assuming they did, they would look at the contracts for when you're in testnet and when you go live, because there's plenty that does have to change. You don't just copy and paste that and then go live, right? It's going to be a bit of a change. They probably would have found that the address was different. So it does kind of have to do with audits, Joseph, and it would have saved you 165 ETH. So a very exciting launch. Definitely lost some trust here with the community. I agree, Ozzy Bogan Tech. Don't trust, verify, right? Hey, man, nice to have you joining us here. And they're not the only one hoping to be a kind of MicroStrategy for ETH by basically taking on debt to buy up ETH and divvy out gains and volatility over to folks who deposit ETH for this strategy, or really put in their own money to help this strategy along. There is also another company called MicroStrategy. As far as I've seen, I haven't really found who the founder is. They only have like 230 followers on X, but it's, I think, worth following some of this stuff. And maybe there is someone who really knows what they're doing behind this particular project. The website starts by saying, "Make ETH great again. Help build the largest on-chain Ethereum treasury powered by reactor-grade volatility. Review docs coming soon." I hear that this project is actually hoping to go live on February 5th, so maybe we'll stay tuned. I actually am following them now on X. This is the first I hear of them. So they have this blog post. Let's see if there's actually any sort of brains here. Maybe we can learn from reading this blog post to see what kind of mindset these folks have and if this will actually be valuable and what other projects might hope to do by imitating MicroStrategy. So let's dive in. I think it is informative, illuminating, and can give us some clues here. So Digital Volatility published 2 days ago, January 29th, Volatility. Vol never changes. Since the dawn of markets, when humanity first discovered the power of supply and demand, fortunes have been made and lost in pursuit of everything from currencies to commodities to simple speculation. In the age of digital assets, the nature of markets evolved into something new. The world witnessed the emergence of blockchains where volatility knows no closing bell. But it was not, as some had predicted, the end of traditional finance, TradFi. For while the stock market had its circuit breakers and trading halts, it reminds me of the first time Trump was elected and the circuit breakers came on overnight and trading halts, as there was a put under the market. No, you cannot keep panic selling because of algorithmic trading, and to protect integrity of markets, we have to halt things. No, we can't do that in crypto. Digital volatility remained constant. An endless ocean of opportunity for those who learn to navigate its waves here in DeFi, decentralized finance, because volatility never changes. Some sought shelter in the supposed safety of blue chips, just like blue chip stocks, right? Like the IBMs, like the Microsofts, like the Apples. Others embrace the storm, building systems to harness its power. This is where our story begins, they write. Volatility, what is a blue chip in crypto? And who decides? In traditional markets, the answer comes prepackaged with all the usual suspects: track record, cash flows, market share. These stalwarts of Wall Street pride themselves on their stability. Low volatility isn't just preferred, it's practically a badge of honor. My, how times change. But digital assets shatter this comfortable paradigm. We're not just comparing apples to oranges here. We're comparing horse-drawn carriages to spaceships. The volatility that makes desk jockeys wake in cold sweats, that's our rocket fuel. I'm getting like Arthur Hayes vibes from all of this. I don't know about you guys, but how do we measure this power? The price movements don't lie. Let's compare 3 assets of similar market cap. One of these objects is not like the other. Can you guess which? And they show a chart here, a bunch of charts, 3 different charts. Obviously, the one on the right looks way more volatile. So, in the hollowed halls of TradFi, they speak of crypto volatility in whispers, as if apologizing for some embarrassing relative. Oh, that crazy cousin ETH, always moving 20% in a day. But why apologize for power? This isn't a bug in the system. It's the very essence of an emerging asset class finding its true value. Enhance. What happens when you take this digital volatility and amplify it? Let's run an experiment for science, of course. Imagine having long-term leverage against Ethereum, not the gambling kind, mind you, but something more strategic. MicroStrategic. Start with a treasury holding ETH, now add an equal amount of debt to purchase more ETH. The liabilities remain frozen in dollar terms, but the treasury's exposure to our favorite volatile asset turbocharged. Let's examine last year's data, another chart showing volatility amplification in action. And they're kind of talking about their token here, MGST, that they're creating. MicroStrategy. Simple enough, right? Not so fast. You might think this is just delayed gratification. So basically, in other words, you get more of this volatility to the upside and downside when you use leverage, right? You boost your direction, your gains or losses. Yeah, you definitely give it a nice boost. You might think this is just delayed gratification, buy more ETH now, pay later, who cares? But higher volatility makes the strategy increasingly valuable. As price swings grow larger, so do the opportunities for those who know how to harness them, and harness them we shall. This leads us to the million-dollar question, or should we say billions. 3 of them, in fact. Why would lenders give MicroStrategy $3 billion at 0% interest? The answer lies in something far more fascinating than mere leverage. Delta. This is normally where readers' eyes glaze over. We get it. Financial modeling isn't exactly beach reading, but pause for a moment to admire the equation that changed finance forever. And they have their token here and some sort of volatility, time to maturity with these convertible debt units. And yeah, trying to figure all of that into how to actually automate this strategy. For anyone who's ever wrestled with black skulls, we feel your pain, but here's the simplest possible explanation. This equation quantifies the probability that MGST hits the convert price before maturity. It uses historical volatility to peer into possible futures. Obligatory disclaimer, past performance does not equal future results. You know the drill. Enter Delta, the mathematical heartbeat of convertible trading. Armed with this probability, traders can run a strategy that hedges their conversion risk. Delta neutral, if you will. The mechanics are elegant, short the underlying asset just enough to stay balanced on the knife's edge of probability. That's what this equation hopes to do. But markets move as they tend to do. How inconsiderate. When price rises, our trader borrows more of the underlying to short, but when it falls, they buy back at a lower price. And here's the beautiful part. This strategy forces you to do what we're often told. It forces you to sell high and buy low by design. So what do our convertible holders really have? Not just a debt position. They've unlocked a trading strategy that harvests volatility itself. Now that's what we call yield farming. Now we arrive at the fun part, putting CVs to work. To unlock the full potential of convertible arbitrage, we first need lending markets for our CVs. Could you run this strategy without them? Theoretically, but we're all about capital efficiency at MicroStrategy. Enter the new wave of DeFi lending protocols. Quick, easy, and best of all, permissionless. Here's where things get interesting. CV holders take their convertibles to be determined, using them as collateral to borrow MGST. The protocol lets them borrow proportional to the underlying convertible amount, all while maintaining a safe liquidation threshold, all automated with this smart contract. What does this mean for our ecosystem? CV holders get liquidity against their positions, while MGST holders, so this is like their DAO token, earn real yield from lending. Well, I don't know that this is actually a DAO. I don't hear anything about voting here and so on, but you do get a yield by being an MGST holder, and I assume staking it on their platform and so on. Yes, these arbitrage traders are technically shorting your precious strategy token, but they're paying you for the privilege. Real yield, bottled and served fresh. That's what this farming has been a lot about putting up your tokens into some sort of liquidity pool so that others can borrow it and so on and do whatever funny business, and you get paid some sort of yield dividend on the other side when you close and pull out your funds out of that liquidity position. And unlike traditional markets where setting up these trades requires special relationships with brokers and multiple counterparties, DeFi protocols make it all possible with a few transactions. The future of finance served without intermediaries. I do love that. They're kind of speaking to my heart here, I'm not gonna lie. Some see volatility as chaos to be feared. Others see it as energy to be harnessed. In digital assets, we're building the technology to do exactly that. The markets may change, the assets may change, but volatility never changes. And we wouldn't have it any other way. Yeah, I guess it's something to keep tabs on, but there's something here about using DeFi for these kinds of purposes. And of course, these kinds of ideas are popular because MicroStrategy has seemingly done so well for the perception of Bitcoin, for helping some earn yield through it. So many different things, right? And it's just something catchy. The Ethereum MicroStrategy, it could put new legs under Ethereum. I do think that over time, this would actually dampen Ethereum's volatility and maybe even in some short-term scenarios be negative when you see Ethereum being used to short the very underlying price. But overall, I think it just increases usage of the network, adoption, and realistically transaction fees, which fuel realistic demand for the ETH price and puts a base under it that will allow for what we're seeing that Martini guy wrote to actually come true, and time again, I assume, over the longer term. Anyway, yeah, could be something that blows up, just like we've seen with ICOs, with NFTs, with meme coins, with DeFi. We need a new narrative. And yeah, the ETH about to explode narrative seems like it's taking root too. I like that. But if we have actual fundamentals underneath, that's even better. So yeah, as we move on here, we're hearing, I actually had not announced this, that 2 days ago, Trump linked, he's a majority shareholder company, Trump Media and Technology Group Corp, under the NASDAQ as TMTG. They're the operators of the social media platform Truth Social and video streaming platform Truth Plus. They have put out this press release announcing an expansion into financial services. So they're going to be diversifying the company's cash and cash equivalent reserves into this new financial services and fintech brand called Truth.fi. And by the way, guys, just so you know, I had looked up Truth.fi and I did not find that the domain was owned by them. It looked like it was up for bidding, so maybe someone could take advantage of that. Although I'm sure the price would be insanely high if Trump will be building out something called Truth.fi for finance. But anyway, I digress. I go on to diversify the company's cash and equivalent reserves of over $700 million that they had as of December 31st, 2024. They're hoping to invest up to $250 million that's going to be custodied by Charles Schwab. Charles Schwab, huge financial company. I heard of them way before I had heard of crypto, even had an account. And they're going to be parking funds over on Charles Schwab, and they are also going to have Charles Schwab advising on exactly what to invest into as far as separate managed accounts, ETFs. So that could include a Bitcoin ETF or other kinds of crypto ETFs or exchange-traded products, Bitcoin and similar cryptocurrencies or other crypto-related securities. So basically saying we can put $250 million of this into whatever. And the CEO and chairman of TMTG, the Trump Media and Technology Group Corp, Devin Nunes said, "We look forward to launching Truth.fi, introducing TMTG's investment vehicles and unlocking synergies. Truth.fi is a natural expansion of the Truth Social movement. We began by creating a free speech social media platform, adding an ultra-fast TV streaming service, and now we're moving into investment products and decentralized finance." Developing, I was just thinking about Trump coin, which we'll get into in a little bit. Developing American first investment vehicles is another step toward our goal of creating a robust ecosystem through which American patriots can protect themselves from the ever-present threat of cancellation, censorship, debanking, and privacy violations committed by big tech and woke corporations. Isn't he, as president, supposed to have like no conflicts of interests, but you see his companies doing all this stuff, which I think, by the way, is good for crypto overall, a lot of what he's doing. But it makes me think about plans that he might have after he leaves office and how he probably wants to continue to make money for himself and his boys and his folks, right? And by really deeply integrating into DeFi with his various companies and by promoting cryptocurrencies, he stands to benefit so much after leaving office, right? There's plenty who think he will never leave office, that he's trying to grab a grip on the administration's, have their power over for all time, and we're going to be living some sort of dictatorship. I don't know that I subscribe to these conspiracies. Maybe you guys do. But anyway, I guess it's possible, which would be scary. But Charles Schwab, are they good for crypto? What do they think about crypto? It looks like they are positive about crypto. They've done some research here. They've built out infrastructure. You can check out their website. You can open up an account. Pretty dope. You can get into Bitcoin funds with 0% fees. You can get into spot Ether funds, multiple different exchange-traded products, commission-free. Really nice. I don't know that you can actually buy straight spot. Oh, no, you can't. No, you cannot buy straight spot Bitcoin or Ether, sadly, on here. You can only access these different products to invest into them. But they do have like different themes, which I think are of note. They've launched this whole thing with 40 plus different themes where they automatically like gauge what's going on, what is happening with trends, using their research and proprietary technology, they say, to uncover relevant stocks and products that are grouped into these themes. And then you just buy it, almost like, buying some sort of index fund, but you can kind of change it. If you don't like this company in that theme, you can remove it. You can add other things. So I think that's interesting, and I haven't really seen that before as a product. So yeah, they probably will be a decent custodian and someone we want to have on our side here in TradFi. And going on here, there's definitely a boost to Ethereum being given overall here. And this is something that's changing, I think, the sentiment right now that is causing folks to begin to take a more serious look at Ethereum, moving past the hype that we've seen recently around Solana. Trump buying $10 million worth on Ethereum again in separate transactions, 2 separate transactions. Wrote here, Ted Pillows, it's time. Ethereum time. You can see here on CowSwap buying in 2 different swats, 4.99 million ETH and another 4.98 million ETH. This follows the other ETH that I kept announcing that he was purchasing recently, and brings their total amount of ETH, their biggest holdings here, to 66.297 thousand ETH, worth $218.24 million. They also have, of course, other things like WBTC. They have TRX. They have $36 million in USDC. Pretty much need that stuff to engage with a lot of the trusted smart contract DeFi platforms that are out there. And notably, as we look down this list, going way down, we're not going to see Trump coin on there. It's strange, right? Initially, you might think it's strange. You have a Trump company, World Liberty Fi, that he's linked to quite closely, that is buying ETH and getting ready to engage with DeFi on a big level, it seems, here on CowSwap, and they have no Trump coin. So that you might ask yourself, you might say something like, well, maybe if they went long, right? If they were buying Trump coin, that would signal good boost to it. But really, they probably think that Trump coin is going to be crashing. That would be my initial suspicion, is that it's probably headed much lower. So they don't want to buy it and add it to World Liberty Fi, because they probably lose money by buying it. So, okay, so why don't they short it? Well, why would Trump short his own coin? That would not be a good look at all. So it kind of makes sense, really, if we think about it, why they don't have any Trump coin. They are getting behind ETH. Joseph Lubin of Consensus back tweeting again. He's alive now too. People have been calling for his return. He previously was of Ethereal Summit, a huge Ethereum conference. It was probably my favorite Ethereum conference to attend. Really liked the community, really liked a lot of the projects that were showcased. I got to meet his father. I got to hang out with so many cool Ethereum folks in really nice venues. I really enjoyed those conferences. I would like to go back to that one, if anything. But anyway, he wrote, from what I can tell, a Trump family project has purchased over $250 million of ETH recently so that they can set up a DeFi business. So this is in response to Eric Connor, who's recently become so disappointed with ETH that he has jumped ship and taken .eth away from his name. Okay. He seems kind of like a hanger-on to me. He has over the years. But he wrote, I guess... oh, look, Joseph follows me. Oh, I'm honored, Joseph Lubin. I guess everyone realizes that Solana is in the DC inner circle pitching the Trump administration why they are awesome and Ethereum sucks. Ethereum has no one there. Zero representing. So he's basically saying, look at this crypto ball. You had Ripple there. You had Solana executives who had Trump's ear for a bit, and they shilled the crap out of it. And yet somehow, like Joseph very nicely outlined, you still, despite that, have with no one Ethereum representative. There was nobody from the Ethereum Foundation. Vitalik wasn't there talking to Trump and trying to speak up Trump at all. No representative of Ethereum. If your coin has a CEO, you're in trouble. Anyway, nobody from Ethereum was there pitching him. And yet Trump's linked company, World Liberty Financial, is buying ETH. That's something to definitely take note of. Anyway, his Trump coin is not doing so hot. Nearly $10 billion wiped out in President Donald Trump's meme coin crash. And yeah, like I've shown you guys, I talked about it yesterday. Out of the 1 billion maximum supply of Trump meme coin that exists, 200 million coins are currently circulating in the market and are in public hands, meaning 800 million tokens, 4 times what are currently in circulation, are set to be issued out over the next 3 years that are locked up. To me, that makes sense. It suddenly makes sense why World Liberty doesn't want to be buying this thing. They're going to have to wait for 3 years of dumping. They're going to have to wait through the bull market till everything starts dumping and this coin trends towards zero. I think it's very difficult for something to actually hit zero. But yeah, this article, and maybe this is true, kind of delves into the Melania token that was launched by Trump. Took nowhere near as much of a market cap as what you saw with Trump coin. That was like the 15 coin spot on CoinGecko. Right now, it's way down there. It's like the number, yeah, it's right here at number 36. So it's crashed quite a bit from the highs. But after he launched his coin, Melania, wife, launched her meme coin. And yeah, it did not get nearly as much. What the heck? This price seems, this website seems to be going down. Anyway, since he launched his own coin, you might think, great, I'm going to buy that coin. But then suddenly you see his wife launch a coin. Like, who's going to launch a coin next? His uncle, his brother. This kind of takes away from every subsequent project and almost the initial credibility for Trump coin. So what will finally put a Trump coin put? I don't know. I've heard about different companies that have licensed trademarks and rights to be able to create watches and merchandise that accept Trump meme coin. Maybe that'll be enough. And yeah, by the way, that company who created the Trump meme coin is issuing out licenses for these different websites who are accepting Trump coin for this merch. I don't know if that's going to be enough to really put a put here, but I do support people being able to engage with crypto to get real world merchandise, to use it for commerce services. I think that's a big part of Bitcoin's white paper, peer-to-peer cash. We should be able to use cash to buy different things, something that I super support and I want to see make a comeback. Anyway, I do feel like this coin in particular is heading to Goblin Town. Nothing goes down in a straight line. This one kind of has plummeted a lot. Yeah. Anyway, when you bought into a project for a quick flip, but ended up a community member, some will probably continue to hold it way down. I don't know that Trump is going to be one of those community members. Maybe he will. Anyway, I found this by Neeraj K. Agrawal as we begin to reach the end of the show here. He wrote, ICOs were better than meme coins. And yeah, I agree, man. 2017 was so cool. So many different ideas. It was such a boost to creativity for so many different developers and people. It created so many jobs, actually, within the ecosystem and for people outside of the ecosystem to get involved. You had so many companies that were coming up with a white paper and sometimes even more than a white paper. And they were able to raise so much crypto. Unfortunately, it didn't pan out. A lot of them did not keep their promises. ICOs got a bad name, but it allowed so many folks outside of just accredited investors who have wealth and financial knowledge to get involved with these things, to begin to create their own ideas, to get excited about the future. So much that ICOs were good for. And allowed for some people to make mad gains realistically that they can't besides with penny stocks. But even with something like stocks, you see that they're regulated. That's what the SEC is supposed to be there for, so that if you kind of make a white paper and you outline something like a prospectus, you have a promise to token holders. It would be in an ICO world or a crypto native world. And if you are outright fraudish, if you're a fraud, then the SEC can do enforcement against you. That would have been the right way to actually manage the Securities and Exchange Commission, not to pretty much ban them completely except for certain accredited investors, and then create all these pre-seed things. And ICOs are pretty much not publicized at all. You have to kind of know people in crypto and then be friends with them to hear about subscribing to these different allocations. And then you have like scenarios where a lot of people buy these things in the background. I saw it myself with a lot of the crypto influencers who would ask me to try to get into these things. And it just always felt so shady to me to do. But anyway, yeah, I would like to see ICOs make a comeback under the new administration and new SEC leadership. So I 100% agree. Opening up ICOs anew rather than keeping them outright banned in the US for the unaccredited public is what the SEC should look into next. I tagged Hester Pierce. I couldn't tag Mark Ayuda. I don't know his exact X account, but he's the acting interim chairman at the SEC, that they could be thought-leading pioneers for the digital age, for the future, right? I would really appreciate if you guys are still listening, and thank you guys for that. For those of you who are, if you guys could go on X and retweet that, I think that would be helpful to get visibility. I think this should be something that fundamentally drives value for, of course, ETH and for innovation here in the United States and elsewhere as well, since we are the leader in so much of what other countries and central banks and everything else and financial commissioners do. So would appreciate your help with that, at least for today, guys. Anyway, ETH Raider wrote, the meme coin meta is ending. The fundamentals era is rising. ETH. Yeah, baby. I'm feeling it. I'm feeling a shift in the air. Maybe not. I'm sure there will be other meme coins, but Trump feels like the ultimate of meme coins, right? People are calling it a top for Solana. People are calling it a top for Trump coin itself, and I struggle to see how they'll ever surpass that top in as far as I can imagine, to be honest, before he even passes away. You never know. Anyways, thank you guys so very much for joining me here. What's going on here in the chat? Let me see what I missed with you guys. I will definitely be checking the chat. I know this video has been long-winded and we've gone through a lot, but I hope you took away valuable information. I know for myself, just researching this and exploring for you guys was super insightful to me. And I hope it was for you as well, as always. Thank you for joining me here. Sean, Ozzy, Romanian Pitbull, Digital Currency Dude, old names, Sam Khan, B Internet User, Validator ETH, always here, Curtis Tape, nice to see you live, man. Kevin, if you're still out there, and thank you for always tuning in as well. Super special thank you, of course, to the Patreon sponsors, to you guys who tip here on YouTube, like Quentin and I can honestly just think of a billion names. You guys make this show possible, and I couldn't be here without you. Take care, much love, and stay cryptic. Peace.